Lisa, you have had experience in trying to push this agenda forward in the context of the UK. Can you tell us about the work you've been doing there and how it's been received?
Of course, absolutely. Thank you so much for having me join this discussion. So the perspective I'll be looking to bring is really building on what was already said, but zooming in on some examples of exactly the type of win-win actions that Shannon just outlined that can benefit both an investor's returns, but also help tackle inequality. So my role at ShareAction, which is a UK-based responsible investment charity, is leading a program of work that supports institutional investors in their consideration of how the companies they invest in are creating or could be encouraged to do more to create good quality jobs as a key remedy to tackling inequality. So one of the streams of work that's been the most successful in that effect has been a program which brings together institutional investors and encouraging the largest publicly listed companies in the UK, the FTSE 100, to adopt the UK living wage standard. So in the UK, there's a voluntary standard modeled much like fair trade that accredits companies that commit that all their staff will apply these annually set academically calculated living wage rates, which are calculated to meet the cost of living and support a family. And companies can become accredited in ensuring that all of their staff, including those employed through contractors, will be earning at least those rates. And so over the past few years, we've worked with investors with an interest in promoting the adoption of these living wage rates, many for the reasons outlined before, by coordinating collaborative engagements with these companies. So our job is really to make it very easy for a very busy investor. We coordinate letters that investors can jointly sign and be privately sent to companies to understand their thinking and encourage progress. And then we provide them that data back that provides them the ability to compare and contrast on how firms are thinking about the issue, how they're positioned on the issue, and they can use it in taking forwards dialogue with them. And bringing together that investor voice has gathered real traction. So when we began, there were 2 companies in the FTSE 100 that were accredited as living wage employers, and now it's 30 that are accredited and another 20 that say they fully apply the standard but haven't gone that last step to accreditation. 93 of the 100 entered into dialogue with investors. And the institutional investors, as the momentum grew, continued to go deeper and deeper into the mainstream. So now there are investors with 3.1 trillion in Canadian dollars in assets under management engaging with these companies on the topic. And for the investors, they've seen the payoffs from that. Although it's still early days, so the evidence is still anecdotal, it's growing from company after company that they see benefits from operational to reputational, from moving to these higher wage rates. And that in turn translates into benefits for their investors. And alongside this, as touched on already, there's a portfolio-wide interest in increasing consumer spending, particularly in tough economic times, to boost growth in other companies in an investor's portfolio. And they also see this as a really positive showcase example that they can tell to their clients and to their beneficiaries about how they're playing a role in helping tackle one of the most important societal issues that does have that public concern behind it. But I think one of the most important benefits that the major investors we worked with gained is in the increased depth of understanding on how companies are approaching investment in staff. So as Shannon mentioned, the disclosure on this area is a real barrier to investors doing more. A study found of the world's largest companies, only 12% reported the rate of employee turnover. It's not many. And the living wage is a very helpful tip of the iceberg issue to get specific in conversations with companies about their workforce. And so that's really where we're likewise casting our eyes next, is the next potential big win-win for society and for investors. So we've recently developed this new program called the Workforce Disclosure Initiative, which we're really happy to be collaborating with Share on since it's such a big topic to tackle. This program is really designed to help overcome this barrier for investors to play a more active role through making it a very resource-efficient process of asking for, collecting, and understanding the key data on how a company manages its workforce. We're really looking to the model of how the Carbon Disclosure Project, or CDP, did that before on environmental issues, because this barrier has been tackled in an efficient way. Although there's a different set of challenges when it comes to people rather than emissions, there's much to be learned from the process itself, and particularly the success it's had in mainstreaming useful disclosure for companies and investors alike. So essentially, I would just end with my key takeaways being that, firstly, investors do have a common interest with society in large in tackling inequality. Secondly, there are very concrete steps that investors can do out there, and ones that particularly through collaboration don't require a lot of resource. And finally, these steps can be very effective in driving change and can drive a real improvement in tackling inequality.